Chris is going to talk to you about the pulse trading technique. And, you know, one of the things, just like anything else, that, you know, you guys have probably seen this before. So again, there's no get-rich-quick scheme, you know, that'll work in the market. I think Chris will probably tell you it's not like he just turned the computer on one day or showed up on the floor one day and started printing out a bunch of money. But it took time and years and a lot of testing to develop the techniques that he's come up with, and we appreciate him talking about pulse options and how he uses it in his own personal trading, and then also taking the time to spend with you guys to go through this presentation. Then I know that he's going to also help, you know, take some questions along the way from you guys about that and how he uses it in his trade plan each day. But Chris, we really appreciate you being here. This is Chris's first time actually to speak on the Trading Pub, and so very appreciative of him taking the time to join us today, and I know that you guys are definitely in for a treat. So Chris, at this time I will go ahead and turn things over to you, and you can take it away. Hey Chris, be sure, I think you have to turn the be sure to turn the mic back on. We're not hearing you yet.
You know, it does help if I unmute myself. Anyway, first of all, I'd like to thank everybody for coming. I see by the map that some of you it's the middle of the night. Morgan, I thank you for the opportunity to present today. Again, thank you all. I hope to not disappoint. And to me, it's pretty simple. Math shouldn't disappoint. I always hated subjects in school like art. I remember telling my art teacher the first day of the semester in high school, how can you grade art? It's subjective. She said, watch, I got a C. And math, on the other hand, I always was very, very good at math. And so having said that, I want you to know this is not squiggly line math. This is simple addition, subtraction, multiplication, and if you're ready for it, division. So having said that, today's presentation is trading weekly options using math to generate fantastic short-term trading profits. As always, we have to start with a disclaimer, right? All the securities used in this presentation are for educational purposes and are not to be construed as a recommendation to buy, sell, trade any of these securities. Right? So having said that, let's get into the system here. Now, the pulse system is a rejection-based system. Understand that it focuses on options. We start with a large universe of stocks, you know, almost 8,000 of them, and then we whittle this list down until we have just a few. First cut, if a stock doesn't have options, we get rid of it. So 5,000 stocks are thrown out. So we then whittle our way down further and further. To me, where I tend to focus with is on the weekly options, right? And so my pulse system is an acrostic, often confused as an acronym, right? An acrostic is an acronym on steroids. Each letter represents something. I use it as a mnemonic, which is a memory tool, because I like to teach you how to do this on your own, right? I can do this for you, but I like to teach you this on your own. P, profit potential. U, upside reward. L, low risk. S is setups and strategies. And E is events, entry, and exit. Right? Now, my pulse system, what I've recorded a number of videos. We put them on a number of DVDs. I think there's a dozen or more videos. Don't quote me. I can't count past 10. I write a weekly newsletter. I publish it on Saturday nights. And in the newsletter, I have a watch list. This is the stocks that have very good math, right? Very good math behind them. And then we take that list and we whittle it down further to what I call the top 5 plus or minus, which is generally 5 stocks, give or take a few, of the best setups for that week. And in each newsletter, we review the previous week's picks, and then we try and educate you. So having said that, let's get into the acrostic pulse. P is for profit potential. This is a screenshot from earlier this year. This is the MasterCard 575 put on July 31st. It opened at 2 cents, right? Since there's 100 shares per option contract, that worked out to be $2 per contract. It traded up, right, to a high of over $10, which with 100 shares per contract, that's over $1,000. So $2 became $1,000 in one day. And if you do the math, that's a 50,000% one-day return. Now that's not an annualized number. If you annualize it, it's crazy big. Now, this is not a typical trade. Now, I have to tell you that I have a student that traded MasterCard on this day. He bought an option and he made 1,443%. And he asked me if this was a record. By all means, it's not a record, but this is a more typical trade. This is a more recent trade as well. This trade is from last week. This is the FCX, right? Freeport-McMoRan, $36 put. This particular one is from Thursday, November 7th, just last week. This particular option opened at 4 cents, right? And it closed at 4 cents the day before. So you could have bought it Wednesday's close at 4 cents a contract. You could have bought it at Thursday's open at 4 cents a contract. It made a high of 35 cents before closing at 30 cents, right? And so from one day to the next, this is a 650% gain, albeit it's a move of almost 9 times in price. And to me, it doesn't matter if how big a move like this is if I don't have a student that hit it, right? And so here is a portion of an email that I got last week from a student that made this trade. He says, great talking with you yesterday. I closed out my positions. Very happy. The results are below. Right, November 7th, bought 200 FCX 36 puts at 4 cents. Right, understand that since there's 100 shares per contract, that's $4 a contract. 200 contracts at $4 a contract means he paid $800 for the position. Later that day, he sold 150 at 30 cents, right, which brings in, quick mathematics, $4,500. The next day, right, since he had all his money out, he was letting it ride. He sold the remaining 50 at 28 cents, which brought in another $1,400. And he said, done trading for the day. I'm going to go out and rake some leaves. Have a good weekend. And bottom line, he turned $800 into $5,900 in 2 days. Now, somebody might question how typical that is. I think it's actually more typical than you realize. Let me continue. So this is P, the potential. Right? Lots of potential, upside reward. I look to make a minimum of 100% on a trade. Right? That's my goal. I like to double my money. Right? I like to double my money in less than a day. If it takes me a couple days or a week, I'm okay with that. Right? I look for upside potential, and I'm not throwing darts to do this. I actually look for low risk setups. Right? And one of the fact of the matter is we try and risk as little money as possible. So, looking at this email from this student, he bought 200 contracts at 4 cents for a total of $800. He could have easily bought 100 contracts, risking only $400. Right? He could have bought 20 contracts, only risking $80. He could have bought 10 contracts risking $40, right? It's very low risk. We're not risking a huge amount of money. Now, PUL, this is the part of the acrostic. This is pulling money out of the market. I have a system to choose which stocks. I have a system to reject. And I don't hide my system. It's not a black box where I frankly tell you, hey, we're going to buy FCX options, right? We're going to buy MasterCard options. I tell you exactly what I'm doing. So it's not black box. It's a white box system. And I liken it to playing the game Clue, right? Colonel Mustard in the living room with a knife. The market gives us information, and with that information, right? With that information, we can determine what stocks to trade, or which stocks to trade options on, and which options to trade that we can risk a small amount of money and possibly make a lot of money. Now, I have to tell you, the example I just used was an FCX, a Freeport-McMoran put option that was 4 cents, right? It risked pennies. And so when I talk about penny-priced options, I'm not necessarily talking about options that are 2, 3, 4, 5 cents. I'm talking about options that have a bid-ask spread that are in pennies, not in nickels or dimes. All right, some of the examples I'm going to use here in a couple minutes are a little bit more expensive stocks, so I want to make sure everybody's on the same page and understands what I'm talking about. But PUL is our system to find the right stocks to trade. Our stocks that make the watch list in each newsletter is based on the mathematics in the PUL portion of our Pulse system. For a stock to move from the watch list to the top 5 plus or minus, now we get in the SE portion. We're looking for a stock-specific setup or a market-wide specific or market-wide setup. A stock-specific setup might be an earnings release, right? A market-wide setup might be a non-farm payroll, a Federal Open Market Committee, FOMC meeting, right? These are setups, and in the newsletter, we talk about a setup and give an example, right? So the MasterCard move earlier was from earnings, right? The FCX was not from earnings, right? But it was tied together for a specific reason. Now, S also includes strategies, right? We have directional plays and non-directional plays. A directional play is if you think a stock's going up in price, you trade it one way. If you think it's going down in price, you trade it another way. If you're not sure which direction it's going to move, whether it's going up or down, it doesn't really matter, because with options, we have strategies that we just want the stock to move more than it normally does, right? And typically what makes a stock move more than it normally does might be an event, right? And our event might be stock specific, again, a earnings release, or it might be a market-wide event, right? So E is event. E is also entry. We can enter a stock at a certain time, or we enter at a certain price, right? And one of the things I look for is we have non-farm payroll as an example. Non-farm payroll typically comes out the first Friday of the month, 1 hour before the market opens. Now, the last 2 non-farm payrolls were delayed because of the government slowdown, right? So, the other 10 kind of went on time, and I expect the next dozen or so to go on time. But these are known days, weeks, or even months in advance when they happen, right? That event is 1 hour before the market opens. And so we put on our trade either the close at the day before, anticipating a shock to the market, or we'll put on our trade right when the market opens, with an anticipation that the numbers released in the government report will shock the market, right? Other times we enter based on a stock being at a specific price, because at certain prices we have less risk, right? So E is events, E is entry, and E is also exits, right? We can exit with a target order, or we can exit with a stop order. Now, I like to use stop orders when the option's gone my way, to place a stop underneath it and keep raising the stop as it goes. We call this a trailing stop. It allows us to stay in a trade and make all sorts of money. Now, a couple things while I'm doing this, I have people typing questions and whatnot, and I got someone made a statement: trading earnings is a very high risk. It's not pennies. I'm going to disagree with you 1,000% if you follow our system. The typical way that people trade earnings are to trade before the earnings announcements, trying to get a big move. We do not trade before the earnings announcement. We trade after an earnings announcement, right? So we avoid the implied volatility inflation at an earnings. We let that inflation disappear before we trade. So anyway, having said that, what we're out to do is we're trying to make money, right? Make money, buy low, sell high. That's the bottom line, no matter how. Now, again, I've got people sending questions. I got someone saying, hey, most earnings are after hours. Most earnings are either after the market closes or before the market closes, because the market does not want that news coming in while it's coming on. We get a gap if we get a big change, and we trade that, and we have a system for trading that. So I'm not saying I know whether the earnings are going to be good or bad. I'm saying I've got a system to trade it, and I'm going to show you how. Understand, we are focusing on options, right? Stocks are one-dimensional. They have price. A stock either goes up or a stock goes down. Options, on the other hand, are multi-dimensional, right? And to me, the beauty of options, right, the reason to trade options are how much you could lose and how much do you use, right? I looked at Priceline here the other day, and I saw that there was 600 some odd thousand shares traded of this $1,000 plus stock, and then I saw how many options contracts traded and how many shares that they represent, and Priceline trades more in the option market than it does in the stock market. And I'm not going to pick on Priceline, right? Because, you know, if you believe in the stock, you go long, right? One-dimensional, you make money if it goes up. If you bet against it, you go short, and you want the stock to go down. But if you're wrong on either direction, but more important to me, that you use a lot of money, right? We are using, or most people use options because they are leveraged directional plays. They buy a call option when they expect the stock to go up in price, right? A call option gives the buyer the right to buy the stock without the obligation, right? A call option is a bet a stock option when you think the stock is going down in price, understanding that a put option gives you the right to sell a stock without an obligation, right? A put option is a bet that the stock is going down. I mentioned earlier non-directional trades. We have a straddle, which is a call and put with the same expiration and the same strike price, right? It's a non-directional bet a stock will move. When a person buys a straddle, they're not anticipating necessarily the stock will go up or that the stock will go down. They're just anticipating that it's going to go one way or the other, a very large amount, right? It's a non-directional bet the stock will move. A strangle is a call and put with the same expiration and different strike prices, right? Typical strangle has a higher strike price call and a lower strike price put. A strangle is a non-directional bet a stock will break out. So I talked a little bit about earnings. Here's a clip from my newsletter a week and a half ago, right? Now understand I had a lot more analysis than this, but this is the bottom line paragraph here, right? This is on Tesla. This is my Saturday, November 2nd newsletter about Tesla, which was going to release its earnings later that week, which was last week. And again, I had graphs, I had much content. We're looking to trade Tesla after the earnings if it gapped. And I don't care if it gaps up, I don't care if it gaps down. I needed it to gap. And this is what I wrote. Quote, if Tesla gaps up, I feel the reversal has a higher likelihood of being the better trade. Right? Let me stop right there. A gap up is when the stock closes at a certain price, right? And then they release the earnings and the market is kind of shocked by the numbers. It's not what was in line with their expectation. A gap up is when the stock opens up much higher. And I felt that if it was going to open up much higher, it was going to reverse and head lower. So I said, if it gaps up, I feel the reverser has a higher likelihood of the better trade. Now, back to my quote, I continued. I said, if Tesla gaps down, right, I feel the continuation has the better chance. And a continuation is if it moves the same direction as the gap. Anyway, both involve buying the puts. As always, you can hedge yourself by trading strangles, buying both the call and the put. So it was pretty clear what I said. I said, hey, look, if Tesla makes a gap, whether the gap's up or down, right, on the earnings release, after the release, buy put options. And if you're not sure, buy put options and call options. All right? So here's a testimonial I got on November 7th, Thursday, November 7th. Now, a couple things. I don't edit the emails. This is from a student. He sent it to me Thursday morning, and the Tesla gap was on Wednesday. So he should have wrote Wednesday at 9:39, right? And if you'll notice, there's probably a misspelt word or two. That's okay. But here's the bottom line. He bought 5 of the 143 puts on Tesla for 42 cents. Right? 42 cents is $42 a contract. 5 contracts at $42 a contract is $210. He placed an order to sell at $1.50 and left. My order was filled 2 minutes later, according to my computer. You suggested puts no matter where it opened, and it worked. Right? So his $210 became $750 in a matter of minutes. This is a testimonial email from another student. I received this testimonial on Friday, right? It said, quote, as a newer student of 3 or 4 months, I had a great week trading your system. Here are my results. Now, he actually sent results on a number of stocks, but we're only talking about Tesla. He says he bought 1 Tesla November 149 put for $1.38, and he sold it for $6. So $138 became $600 in 1 day. Again, both of these, are the same setup. They're slightly different option strike price choices, and both of them worked. I think you'd all agree that they work. All right, now, again, he shared this particular one. He also traded, a couple other stocks. The first student I shared, made $15 shy of tripling the size of his account based on all the other trades he had. Again, I'm just picking a couple from last week. And an important thing I want you to understand, right? It's there's a lot of money to be made here, right? Again, we had a student buy an option for 42 cents and he sold it for $1.50. I call this sloppy slop because he left some money on the table, right? This particular option, here's a chart of the 143 put from Wednesday, Thursday, and Friday of last week. I have a box in the lower left where he purchased it right at the open. And again, he bought it for 42 cents and he said he sold it a few minutes later for $1.50. That's probably all contained in the box on the left. If he would have held, right, and if he could have maxed it out, he could have sold it for more than $10. Now, mind you, there are some pullbacks in between, and good risk management would not have had him taken it to $10, but he might have held it a little bit longer and instead of just getting the $1.50. Understand, it's not how much you make on each trade. It's not how often you make. It's the total sum of this. And you know, my students make money. And again, this is not a get-rich-quick scheme. I have a student in Toronto who about 8 months ago started with a $2,000 account, and a couple months ago I talked to him, he was up to $40,000. It wasn't $2,000 all in one trade, you know, roll the dice all or nothing. He's constantly sending me emails, right? He hit Amazon the day it released earnings, you know, 2 or 3 weeks ago. He just one after another, right? It's all very systematic. And again, you know, I've put my system, made it available for everybody. It's a white box. It's not black box. I don't hide. You know, 10 or 12 videos that are on 3 or 4 DVDs. I don't pay attention to how they publish it. I do write a weekly newsletter, comes out every Saturday night. Again, we have a watch list. The stocks have good math. There's top 5 plus or minus stocks. Stocks come on and go off that each and every week. We review the previous week and we educate you, right? In the perfect world, I teach you how to do it and you don't need me anymore. I like to think that you'll continue to subscribe to me because I still try and teach you again and again and again, right? And you know, in the newsletter, I like to give what I call a trip. A trip is a trick. It's a tip. I combine them and I call them a trip, right? And my goal is to teach you to exploit a setup. So one of the videos has a whole section on trading Schlumberger, right? The ticker is SLB. SLB. I jokingly call it slob, right? I'm a slob trader. And so here's a screenshot from yesterday on Schlumberger. This is the 92.5 call. It opened at 20 cents, right? It traded down to 18 cents. It traded up to 85 cents, and it closed at 83, right? If you watch the DVD on Slob, understand what I'm talking about, right? Slob is on my watch list. It didn't make the top 5 last week, but it's a stock worth spending some time and attention at because the options are such that you'll get movements like this, 400% intraday move on a somewhat regular basis. Now, I understand, you know, I'm focusing here on short-term moves. And, you know, here's a move from Apple. This was written up in the newsletter back when we talked about multiple entries below 50 cents, right? On Monday, Tuesday, Wednesday, and Thursday, you had a number of opportunities to get in under 50 cents, and by the end of the week, the option was above $6. Now, in a perfect world, you'd buy it at the low of 17 cents and you sell it at the high of $7 and change, right? We don't teach a system, right, that's has you buying perfectly at the low and selling perfectly at the high. We have a system where we find moves that are so massive that you just got to capture a piece of the middle, right? Now, not all our moves are short-term moves, right? In the July 27th newsletter this last summer, I talked about long-term Apple options, right? And I specifically talked about them because the implied volatility was so low. So here's a couple of screenshots, right? This again, that was the Saturday, July 27th newsletter. Here's Monday, July 29th, the October 500 call. It opened at 270. It traded up to $4. It closed at 380, right? The Apple November 520 call, it opened at $3. It traded up to 412 and it closed at 390. Right? So this is a short-term gain on long-term options. But here's the thing. You know, you have to ask yourself, are you happy if you buy something at $2.70, $3, right, and you sell it somewhere around 4, right? Are you happy? And can you be happy if you would have held that option for a couple more weeks and had it go from $3 to $25, right? I tend to be the person that gets in and out and try and do it over and over again, right? Lather, rinse, repeat. Lather, rinse, repeat. Now, again, the pulse system, it's a mathematical-based system. We are looking to find stocks that options have a statistical advantage to trade. We go into all the math, right? Again, it's only addition, subtraction, multiplication, and division. We've had a series of videos saying how you can find them. We have a weekly newsletter, right, which I share the stocks that have the top math, and then the ones that have the best setups, in my opinion, make our top 5 plus or minus. We review the previous week, right? Listen very carefully. The emperor has no clothes, right? If I am wrong, I'm going to tell you I am wrong. Hey, I picked a put on Boeing and Boeing went up. I'm wrong. Oh, terrible. We lost 15 cents, right? But I also then picked a call on another stock or a put on another stock, right? We don't hide from it. We review and we try and educate. And we are able to string together, lots of reoccurring trades. So anyway, having said that, Morgan, I have a link here. From my understanding, you have an ability to make that a hot link for people to click onto. And having said that, I'm going to try and read some of the questions. They kind of come by while I was going on. So I don't know, Morgan, if there's anything you want to talk ask me
Hey
about.
Chris, yeah, I've got the link posted there. If you can, just maybe take some questions from the guys in the room. I know there's some questions. So guys, if you had questions during the event that Chris maybe didn't get to, if you can type it in, he'll be happy to get to it. And Chris, if you can, just kind of go over a little bit about what that includes, the 20 and 20 package, and then you can take some questions from it.
Well, here's the bottom line. If I can't show you options on stocks, if I can't show 20 that double in 20 days, I'll give you triple your money back, right? And so we've packaged together, the pulse system. We give you the video so that you can see what I'm doing. I find that my most successful students watch the videos more than once, because sometimes when you're watching a video, you say, all right, this doesn't quite make sense. I'd like to ask a question, and then a minute or 2 minutes later, I answer that question, and then I might bring up a point and say, does that, and they go back and you watch it again. So we've set up the videos that you get them, that you can watch them. Again, I'm not sure how many DVDs they placed them on. There's about about a dozen lessons, and then we write the newsletter. The newsletter is typically 20 pages long, and I always start. I have a table of contents telling you what we're going to talk about that week. I have an event calendar, highlighting any events for that week, market-wide events that you need to know about. The first section is my first things first, saying, hey, look, if you only got a couple minutes, read this section. I'll tell you where to go. And then we have some education, which generally the education is either it's a combination of a review looking at the trades we picked at last week or the setups for this upcoming week. Again, we always review the previous week's picks, and then we go into detail on the picks. And the picks are sort of categorized. I will pick longer term options. I'm long VXX puts personally right now. I've traded them almost 30 times straight, making money each and every time. And so like in this week's newsletter, I've actually started to write because I've had some people ask me about VIX puts. They're saying, hey, what's the difference between a VIX put and a VXX put? So if I get a few emails asking the same question, boom, I'll write about it in the newsletter. The key, this Tesla trade, this last week, the MasterCard trade that I had on the, slide earlier, but, we had Amazon release its earnings a couple weeks before that. We have a mathematical system that's different than other people's, right? It's unique. That's all I can say. I've been doing this for 35 years. I worked for a bank in Europe. I personally traded $2 billion. Right? What they say, how to trade $1 billion? It's just like trading $1 million 1,000 times over. And what's it like to trade $1 million? Well, it's just like trading $1,000 1,000 times over. If you don't know what it's like to trade $1,000, it's just like trading $1 1,000 times over. So again, it's white box. I teach you how I pick these so that, if something were to happen to me, you can do this all on your own, right? And having said that, some people don't want to spend all the time looking through all the stocks, doing all the math. So, they even skip the top, the watch list and go right to the top 5. I had a question. Are these trades primarily day trades or overnight? They're a combination of intraday trades and overnight trades. Occasionally we'll get a trade that we'll be in for a week or longer. Many people don't realize, they're concerned about a small account being able to day trade the market. And the reality is, if your account is a non-margin account, the day trading rules don't apply to you. And having said that, if you are trading in a margin account and you don't have enough money and you're concerned about day trading regulations, there are trades that we look at that we buy them on one day looking to sell them on the next day. So to me, while a lot of these might be day trades, it doesn't bother me in terms of, or it shouldn't bother you if you're concerned about running up against any regulations. Yeah, there's an absolute money back guarantee. We have it's a 3-month subscription. If you don't like it at any point in time in the 3 months, feel free to cancel. We give you your money back. And if I can't show you 20 options in any 20 days, that stocks that have options, 20 options in any 20-day period, I will give you 3 times your money back. One thing I'd like to do, Morgan, can I do something special? I'm assuming you're saying yes because I don't hear you saying no. What I'd like to do, and I do webinars, right? This is a presentation of. I can do a webinar, looking at the nuts and bolts of the system. And I'd like to add a bonus, and it's not here, but I'd like to add a webinar somewhere just for these students, not for all my students, but just for this any student that signs up in this group here. I'd like to do a webinar, that I can answer, questions as it goes. I'd like everybody to, I'm not going to do a webinar tomorrow because I want you guys to watch the videos. I'd prefer if you watch them more than once. I'd like you to digest the newsletter some. And, I'd like to do a newsletter, or excuse me, a webinar in the future for this group above and beyond this. And so this is being recorded. You can hold me to it, and we can work out the details on that. But I'd like to do that. Anyway, I got a question that says, does the newsletter specify entry, stop, and target value for the picks? Basically, understand that when I write on a Saturday, I don't necessarily know where a stock might be on Thursday. So we have absolute rules as to what strike price to buy in relation to the stock price, right? If the stock's at $80 on Monday and we're looking to trade it on Thursday, and Thursday's at $78, we wouldn't necessarily buy the $80 strike price because it was $80 on Monday. We might say, hey, buy 50 cents out of the money or buy $1 out of the money, and then wherever the stock is, you go accordingly. Can you talk about your losers? Yeah, quite often when I lose, I'll lose 100%. But one of the things, if we're looking at an option that's like 10 cents or less. So an example, FCX is a regular member of our top 5, and I talk on and say, hey, look, we want to buy options that are less than 10 cents. TLT has been a regular member, and I say, hey, look, we want to buy options maybe under 15 cents. So when we're wrong, we might lose 10 or 15 cents, but quite often we'll get a TLT option that'll move to over $1, right? And so again, there's a bunch of math here. All right, let me. David asked do we teach you how to do these on your own, or is this a stock picking service? While it is a stock picking service, I absolutely teach you how to do this on your own. A great example, I had 2 students, both of which named Charles, sent me an email about Chevron a month or so ago. They said, hey, look at the setup on Chevron. And I got one. I said, okay, well, let me go look. And I said, oh, yeah, it's a great thing. So I actually traded Chevron myself. And then later that day, I got another email from Charles and said, hey, go look at Chevron. And I said, well, geez, he wants me to respond. I'll respond to him. Yeah, hey, thank you. I put a trade on. And then only later on, I realized that they were 2 separate students, both named Charles, that had both sent me Chevron as a setup. So both of those Charles have learned to pick this on their own. These are straight options. First of all, we do not sell options. I'm not recommending any bull call spreads, any bear call spreads. This is not credit spreads. This is not debit spreads. This is simply buying a call, buying a put, right? And or buying the pair. So we focus on weekly options, yes. Now, I do not do iron condors and butterflies. You don't need an option scanner. The question is, can you use Thinkorswim? Thinkorswim's a fabulous platform. It absolutely works. How many trades per week? Again, the watch list is probably 40 stocks, and the top 5 is literally top 5 plus or minus. We have had weeks there's only been 1 stock on it, and I think we've had a week that there's maybe been 10 stocks, but it averages probably between 4 and 6 stocks a week. Let's see, are these close to expiration options? Quite often, they are very close to expiration. I look for options that don't have very much time value left, right? If I can buy an option that's out of the money that moves in the money, I can get returns, right, of 10 or 20 times, right? Not 10 or 20%. I'm talking 1,000 to 2,000%. And Bev correctly pointed out, I am buying after the volatility crush. Weekly options don't react to a volatility crush when there's very little time left. The volatility has very little, if anything, to do with it. So someone said 75% of bought options expire worthless. That's an old statistics from back in the day when you had to buy your options from put call dealers, where your choice was either to exercise it, sell it back to the guy you bought it from, or hold it to expiration. I absolutely can prove to you that 75% of options don't expire worthless. And my one point is, we're buying them and selling them. We often will have an option that'll expire worthless after we've made 2, 3, 4, 500% on it. Can you show an example of one trade? How I think I did. I showed the Tesla trade where I told everybody whether the stock gaps up or gaps down, buy puts at the open after the release. We do not sell puts. No, there's no selling involved. How much money do you need to make the trades you suggest? Well, in reality, like I said, I have a student in Toronto, Canada that started with $2,000 about 8 months ago, and he's up over $40,000 today. I have students that have accounts in the hundreds of dollars that do this. Again, we look at that FCX trade. Little story on the student that made that FCX trade where he bought the options for 4 cents and sold them for 28 and 30 cents. The same email, he shares how he bought 400 contracts of a VXX option for 2 cents, and he sold them later that same day for 9 cents. Now the reality is, the commissions can eat you, right? But obviously if you're doing 200 lots, the brokerage firms will give you some sort of break. But at 2 cents an option, that's $2 a contract. If you take commissions out of it, you do not need a big account at all. The question is, there's there liquidity? Absolutely, there's liquidity. I do not pick stocks that have bad liquidity problems. It's part of our rejection system. Question someone asked, will your newsletter begin this Saturday? Yeah, I think if you signed up now, you would actually get the newsletter from last week as well as getting a new one this Saturday. And do we play earnings always after the fact? One of the things, the system is very forgiving. A little personal note here. I have an adult son with autism, and he's actually been in and out of the hospital, and I want to say 6 or 7 times. My wife's been in the hospital a few times this year, so I've had family members in the hospital 10 different times the past year for over 50 days total. And at one point in time, I had my wife in the hospital and then my son at the hospital at the same time. A week like that, I don't trade, right? I don't. The nice thing about this system is that when the family, is not distracting me, I can be on top of it. You can turn it on and off. And, some weeks we have better setups than others, and we write about it. We'll tell you right up front, hey, this is not going to be the best week, or other times this is going to be a great week. We've got 2 or 3 fabulous setups, for next week. Question is, how do we know, when and what to enter? Again, that's the DVDs will teach you, what we're buying and when we're buying it, because it's all rule based. The DVDs will show you the math behind it. Again, this is a white box. There's no hidden, there's nothing hiding in this system. Anyway, Morgan, we're getting some of the same questions over again. So real quick, while I'm waiting for Morgan, the guy said, you found a trading plan that works for you under certain conditions. congrats, but markets are ever changing and different option tactics are appropriate. First of all, I've been doing this for 35 years. Not using short options limits one's opportunities. Not using short options limits one's risk. Again, I mentioned the fact, student turned 2,000 into 40,000. I've got a student that's making, $10,000 a week doing this. I don't know that he has any problem that he doesn't short an option. The DVDs are mailed, and we will mail the DVDs overseas. I have students. I've got a regular student in Ecuador. He's an expat American, and I've got lots of students in Australia. I've got students all over the world, so that's not an issue. Kind of amazing how well my Canadians do. Maybe not so much right now because hockey season's back in, but. A person says, do your setups pick stocks that are in conformity with the trend or broad market sector? And my answer, doesn't matter. We know when to trade, particularly with a non-directional trade. It doesn't matter if the stock's going to go up or down when we have a trade that's set up so well that we're risking very little, right, to catch a move. And I refer back to the Tesla, right? My Tesla thing said buy puts. If the stock gaps up, buy puts. If the stock gaps down, buy puts. And if you're not sure, buy puts and calls. And all that does, it diminishes your return. But I'm going to tell you, when you get better, if you're good at picking directions, you're going to learn a lot about which strike prices and which expirations to buy. Someone asked if you can trade a Roth IRA with Thinkorswim. Absolutely, absolutely can. I know I've got dozens, if not hundreds, of students that do. Again, this is Omnovia is new to me to have all these questions zipping by me at once. So I feel like I'm stuttering here. If someone were to watch me and look, so Morgan, I don't know how long you want me to answer questions. Here's my bottom line. You know what? Trading has risk. Everybody listen very carefully. Trading has risk. When you buy a stock, right, you're risking a lot of money. I like to minimize that risk by buying an option, right? And there's still risk when you buy an option. Becoming my student has no risk. Because if it doesn't work for you, for whatever reasons, you don't have to explain the reason why. You just ask for your money back, right? We give you a 3-month trial. If you don't like it after 2 months, 3 weeks, and 4 days, you'll get your money back. That's the bottom line for, the subscription's $97, and I've got one of the highest retention rates of any newsletters out there because my stuff works. The question was, is my system based on technical analysis or based on price action? Yes, there are certain steps you have to understand. Pulse, P-U-L-S-E, P, profit potential, U, upside reward, L, low risk. We pick stocks that have the right options, right? So that if we want to buy an option that for some reason we change our mind immediately, we're not destroyed by the bid-ask spread, right? The S and the E. S is strategies and setups. Some of the setups, right, are because of a technical setup, right? Technical analysis, and we will write about that in our top 5 description, right? And I will teach you how to do this yourself. I want to get emails from 3, 4, 5, 6 Charleses all at once telling me about the same stock, saying, hey, look at this stock. So Um, can you tell us roughly what the system success loss rate has historically been? Um, you know what? Crazy thing is I like math. I like math too much to guess. We have a wonderful track record of picking stocks. Again, my thoughts are if you try it for 3 months, if you don't think so after 2.5 months, let me know by leaving. So, Morgan, I'm losing my voice here.
All right, good deal. Thanks, thanks, Chris. I really appreciate you sticking around and answering questions for everyone. Appreciate you being here. And guys, I'll post this link one more time if you want to take him up on it. I thought it was pretty interesting guarantee he made on it. So hope that you guys will take a look at it. And like he said, it's $97. You get 90 days, which is 3 months, 3 full months, along with the DVDs that you'll receive. So again, I believe it's video course, a four-part video course, a quarterly subscription, that's a weekly update, and the Pulse Guide. He's also thrown in 2 bonus videos that he said you can watch over and over, and we had a couple people that had taken it previously. They said that they did, in fact, watch it several times. So again, here's the link for that, guys, that you can click on here. Yeah, we will send out a copy of the recording to everyone, but I hope that you guys enjoyed today's session and that hopefully you'll learn and continue learning from Chris. And as he said, he's going to do a special class with you guys that signed up today to help kind of get you primed and ready so you can get the most out of it. So again, nice to see all the kind comments in there of people who have taken the service already, and I hope that you guys will enjoy it over the next 3 months and hopefully learn and improve your trading as well. And it's always cool when you get the opportunity that it has education and trading alerts combined, that he's not only telling you what trades he's doing, but he's also giving you education where you could do it. Like he said, his goal is for you to be able to do this on your own. So yeah, and that's the $97 if is for the first quarter. And like you said, if after 2 months you say, hey, I didn't learn, or this isn't for me, just let them know. So yeah, that's important, Bev. There's a lot of people out there that'll publish their trade ideas, but if the problem is if Chris doesn't teach you to do it on your own, and then something happens and he's no longer publishing those ideas, then you're kind of out of luck. And so it's important with any strategy to not just blindly follow, but actually to kind of dive in and learn about it as well. So, but yeah, you can
Morgan,
take it. Go ahead, Chris.
I just want to say a couple things. One, I'm going to give a bonus webinar. I'm not going to do it right away. I want you guys to watch the videos, right? I prefer if you watch them more than once, and I want you to absorb a whole bunch of newsletters. We'll do this after the holidays, all right? So because we got Thanksgiving coming up, we got Christmas. I'm going to do it in the new year sometime, right? So just so you know when. One thing we didn't say, and this is me patting myself on the back. I'm actually a really good writer, so, or maybe a pretty good writer, or I write well. How's that? But that's just my personal opinion, and again, you'll decide. But my students make money. My students make money, right? And you might be skeptical of these results being typical. I can introduce you to dozens and dozens of students. I have students that have quit their job and trade full-time for a living. I actually have students, right, that have taught their children to do this, and their children have right now I have children, men in their early 20s whose parents, were my students years ago, and these kids have gone on to get a degree in economics or gone on to be a stockbroker or a fund manager, and they did this when they were young. This is not brain surgery. This is not rocket science. This is addition, subtraction, multiplication, and if you're ready for it, it's division. All right, that's the tough one, division. But I'll teach you how to do it. And I'm looking forward to the opportunity to present to you. So again, Morgan, I'm thanking you. I'm thanking everybody for taking the time, especially those of you that it's the middle of the night. Thank you. God bless you all.
All right, good deal. Thanks again, Chris. We appreciate you being here. Guys, I'll type in the link one more time. We'll put a timer up there for about 5 minutes to give you a chance to sign up before we shut the room down. So I'll put a timer up there for 5 minutes, and I hope that you guys have a good afternoon. We'll get the recording out to you as well, probably by tomorrow morning. Thanks, everyone, and there's the link one more time. All right, everyone, we're going to go ahead and shut things down, but appreciate you guys being here and look forward to having you back for our next class. So again, here's the link one more time, and hope you guys have a wonderful afternoon. Thanks.